Well, unless you've been living under a rock, you would know that technology stocks are absolutely on fire right now. But also, we've started to see an increase in volatility while the markets run up. These periods of time have often marked toppings of markets, but timing is everything. And we need to understand whether we can see this market go a lot higher before it even shows any turns. Today, we understand that in our special weekend edition where we cover stocks, commodities, and cryptos in more detail. Well, welcome back everyone to the Daily Show where we talk about the hottest charts, news, macro data, and of course, the key levels. We begin here with the debt ceiling discussion. And if it's your first time to the channel, subscribe, welcome, smash the like button if you enjoyed today's video. I'm sure you're going to learn quite a lot. Together, we're going through heaps of stuff. Biden and McCarthy have got the debt ceiling deal done. Let's find out whether Congress can vote on it and agree. We don't know whether it is really done, but the markets loved it and they went up, continuing this very stellar outperformance, something that we need to be ultra cautious on, although we've seen absolutely no turn signs just yet. And we'll go through those a little bit later. Which ones do we need to be watching for a turn? We've got some of the big key levels you need to be thinking about. Here's some credit default swaps. Everybody's talking about treasuries. Should we be buying treasuries? Is it a good idea? Well, we know that credit default swaps went to multi-year highs. And I think this year, or this week at least, we're going to need to watch that particular chart in some detail. We'll bring it back. We also know that core inflation continues to be the battle for the Fed versus the market. And this is still looking very sticky. As we continue through to the mid-June interest rate period, we know that there are now calls for another interest rate hike to try to get this core inflation down back into the Fed's targets. Remember, the Fed want 2%. It's sticking around 4.7. So there are some problems here with that number. Let's move over to whether big money started to flow out of the markets. The answer is not really. It's pretty consistent. They're still neutralizing, though slightly tapping it up each week. And what this really tells us is that asset managers are still hedging their bets. They're still purchasing, and they're probably concentrated purchasing. We know the stocks. Of course, it's probably going to be tech and not so much of the other ones. But don't worry, if you miss tech, there's always other opportunities. And there's been really hot markets and really not so hot markets already throughout 2023. And we've been following all of them. Energy and metals, notably some really bad ones. Here is what's going on with bond increase levels. So we're seeing overweight bonds continuing to be a big thing. March 09 obviously was a similar reading. Maybe it's becoming too concentrated. A lot of people are looking at this. We'll continue to follow that one. We also know that the stocks beating the index right now is really low. In fact, it's one of the lowest points ever for the S&P 500 in our recorded history. But you do know that a majority of the time, a lot of stocks do underperform S&P 500. It's why people go into indices in the first place. They don't know which stock they want to pick. So instead, they pick an overall part of the economy and say, okay, I think it's all going to do well together. So far, so good on that one. But look at this. Look how low the breadth is. Just another chart representing that particular storyline. When we go over to the surveys that we had coming in, we know that people are starting to go less bearish, very neutral, and slightly more bullish. What we need to see if you are a bear in this market is this getting up plus 30% plus, and we need neutrality to remain kind of between 30 and 40%, and bears generally to get around 30%. When that happens, if you see the signs of turn, you know what to do. That's going to be a much stronger case. Sentiment surveys like that one can really help us, and they're one of our many reasons that we'll be talking about today that can really show us that maybe the market's putting a top in. Let's move over here to forward PE ratios. Now, you'll know that large mega caps and specifically the top 10 to 20 stocks have been running the show. They're still so low on the small caps and mid caps. In fact, they're trading at almost decade low forward PEs. Once we start to get into that territory, you can see it's the tale of two markets. And I just want to kind of reiterate, if we do see a turn, if we do see the breadth starting to increase, then that's going to show us that there is opportunity in other markets. I think everyone really, it's always easy to see technology turn. The question is whether it's easy to then go and make money if you miss that turn from other turns in the markets. This is something that we'll be looking at, and we're not convinced of that just yet, and we'll talk about it later on. S&P 500 pre-election years, we've used this chart a bit just show you that we often go into a semi underperformance area here between basically the end of June in July, and then we go into a really weak Q3 historically, followed by a very nice November, December period and a Christmas rally. If it's like other pre-election years, that's what tends to happen. Let's move into some charts. Let's talk about the skew to begin with. We were very worried about this occurring. The skew, or the black swan indicator, has gone almost to 150. That's a high reading for the skew. That means people are totally freaked out, but at the same time, they're buying put protection. And what we need to see is skew compression. We started to see the signs of it. It wasn't enough. Skew is gone ballistic. We know that we need skew compression to give us an April or August style read, which can be one of the reasons why the market's turn. Remember, so far we've gone through 3 reasons. 1, we'd love to see big asset managed purchases go down. 2, we'd like to see, of course, the turn of sentiment, so everyone goes bullish. And 3, we'd like to see skew get compressed early. And if that happened, that's 3 pretty solid reasons for a potential turn. Here's the NASDAQ versus IWM. I think it's clear that the NASDAQ is super outperforming. And this is not unusual to outperform, but when you start to see these big hikes and these massive moves, you do need to ask yourself the question, is that near the end of this outperformance? Here's a great chart of why rotation was so important. In September of 2020, approximately, we're getting on around 6 months from that low, we started to actually see a huge turn in the market. Now, if you believe that October was the low, we're starting to get into that territory plus of where we should start to see rotation if the markets are going to turn. So you can see here the huge outperformance, the huge underperformance, and that's when you get that breadth turn. So watch the NASDAQ versus IWM or other markets, leads, long, short strategies. These ones are important. And of course, we've got a huge breakout this stage, but maybe a little bit too long. Here's the chart from the start of the video where it all began. We're talking about the idea that the NASDAQ is in an absolute blow off and probably an incredible move. Now, when you get moves like this, it's very easy to say, yeah, that's right, let's ride the run, and absolutely riding the run is good. Now you look for the signs, though, of any turn, and we just don't have one yet. We've got all of our indicators starting to line up so that we're ready for those, but we don't have one. Since we broke out roughly around here, back in, I think it was around the May period or the start of May, late April, you really haven't been able to short the NASDAQ. And I've been cautioning against that on this channel, really saying that those particular stocks are in something that, remember, they can stay, let's say, irrational longer than you can remain solvent in this case. The S&P is a bit different. The Russell is totally different, but here it is. Now, what we're looking at here is an increased spike in NASDAQ volatility versus the NASDAQ itself. If you look here at some of the turns, we often saw this go up. So it's another sign and something we're looking for to do with the April highs, the August highs. What we need is lots of VIX volatility coming in as we spike through. And as that rises and we get these potential turn signs, let's say we do get one, then it's another nail in the coffin for something like this run. Have we got one yet? No. Have we started to see the signs? Absolutely. Put call ratio, a lot of people forgetting about this and not using it anymore. What we're needing to see is lots and lots and lots of calls coming into the market. I've got some charts later on that'll show you that 57% of all the money that went through on Friday was calls. Now that's pretty high, and that's starting to get into that complacency. Everyone's starting to buy calls. That's a good sign if you're a bear. Obviously, it's pushing this gamma squeeze or this huge squeeze at the moment, but something we're looking at. Onto treasuries, big week for them. We'll see what happens with the vote. Obviously, treasuries is in one of our key demand levels we've spoken about before. Right around that 100 is where we think treasuries should be finding some buying pressure. And treasuries are still very much underperforming. And if we believe rate cuts are coming in the future, you got to remember, where did treasuries come from? I'm not saying they go back up to here, but treasuries are still trading a lot underneath where they are. Now, this could become one of the better trades if the right things fall in line. We'll continue to follow treasuries over the next couple of weeks. Dr. Copper saw some recovery on the debt ceiling discussion and therefore maybe bringing some consistency back into the world. Here's the level it bounced off, that last demand. If we do end up closing below that demand, we go down to 3.37, and that continues to bring the demand destruction through. Dr. Copper is a great read for metals trading and also energy, and we know that it's coming back now into supply. Am I shorting it? No, but obviously I'm waiting and I'm looking at it more from a perspective of individual stocks. Over here in Australia, iron ore would be one of them. Let's move over to central banks, and what are they doing? Well, I don't know what the Fed's up to, but basically our Fed reading continues to pump liquidity into the market. The world central banks have kind of stagnated. This is not really what you want to see if you're a bear. You need this green line to start coming down. We've been cautioning against it. It's a bit of a pain. We're still very disconnected on something like the tech stocks though, so we're in the deep red. Again, we're looking for signs. We have not had them yet. Even the pullback that we got last week, that really only came back down to these key levels. It just didn't really move as much as you would think. It came back to the weeklies, and we'll go through that later on. Move and volatility from the bonds compared to the VIX. The VIX did start spiking, but the volatility from the bonds, wow, that's almost now a new high coming through. So this is showing you the bonds market is still stressing out about something we don't know about yet, or at least we're not really considering. We must admit that the bonds traders probably over the longer term do know what's going on, so therefore we have to consider, what does this mean? This is the 94th percentile of the gap between those two. So it's still something that keeps us cautious while remaining, of course, within the trends on those particular breakouts that we've got at the moment. What about the dollar index versus the S&P 500? We can delete these because they're not actually set. I will put the expected weekly options over on Twitter later on. But as you can see here, the SPY has been going up. The dollar has been going up. That's usually a weird combo. We're watching it. The dollar actually has hit a critical resistance, which we'll look at a little later. Now, I've also brought up underperformance of defensives. Now, technically, that's a great thing if you're a bull in the markets because utilities and staples have been underperforming. And if you look at the turn, they started outperforming before all of this crash happened in 2022. In fact, in November into December, they started really picking up. And that showed us that Wall Street was moving defensive before all of this stuff happened. This is utilities versus the S&P 500. Now, notice the underperformance recently, and specifically the underperformance over the last couple of weeks. We don't know the lows in. We obviously have a box here, but we are very much interested in these periods because both this is happening to XLP as well. You can see the lows getting taken here. Now, it could go all the way down to 0.016 as a performance figure. But when we start to get these reads along with higher 10-year yields for longer, which is something we've started to see, here are some of the stats. This only happens 4% of the time. And when it does happen, you tend to see pretty interesting returns on utilities after around a month. And you also get staples doing a little bit better than you would expect. So they're underperforming, they're underloved. They're certainly something that we're looking at. And of course, now we can put them on the charts and start to watch for potential turns. Because again, it's not just tech. We have to look at all the sectors in the market. And if you enjoy that stuff, remember to subscribe to the channel. We'll be going through it in more detail over the next coming months. Let's move over now to the most traded stuff during Friday. And I think there's no surprises that NVIDIA was almost topping the charts. We had a 2.2 relative volume to the 90-day average trade, mostly in calls, almost doubling the call to put volume. And that's because everyone is basically trying to create a squeeze and jumping on board. We also saw huge amounts of calls coming through from Tesla, which pushed us to the most traded level. That was an interesting surprise there. So all of this tech, all these debt ceiling things bought through some big stuff. We even saw like things like Ulta Beauty coming in here with some massive options trades. Of course, Alibaba, Walt Disney continuing to get some pretty interesting reads on it. We'll go through the chart later on for that. But look at all these unusual option amounts. So just huge amounts of calls coming through on things such as semiconductors in particular. If we have a look at the indices, the biggest trades were, of course, SPY, Qs, and IWM. We're still looking at pretty significant put ratios on SPY, Q, and IWM overall, though they have dropped a little bit over the last week. And if we look at the biggest trades, they were 0 DTEs and basically Monday trades, or Tuesday trades in this case. And you can see here that we have some significantly large options volumes, calls coming through hard on the day, pushing up that market, 420, 419, 418, all 0 DTEs. Calls make up the top three. If you can read them during the market processing, of course, you might have a very good reason for why all these markets have been breaking out. It's just basically continued to be that 0 DTE story. Did we see anything unusual when it comes to the options market, though, on single stocks? Well, of course, it was mostly Tesla riding it with a whole bunch of 200 195s. And of course, that pushed it up, as we can see here. Then we had Amazon, also one of the favorites of the day, very well performing stock. AMD continues to be a favorite of people pushing it, and it's getting very high right now. And as we scroll through, there's some other moves. One thing I did want to note here is that we have 50% of all of the trades going through on Friday, 4.46, by the way, which is above 40 by a lot. So there's a big percentage that went through on Friday. 57% were calls, 43% were puts. So we're starting to see that turn now where that PCC, the calls are starting to become a significant component of the market again, and we need to be on top of that. When we move over to a few other things, I just wanted to quickly remind everybody, if you haven't already followed us on Twitter, do so. Links in the description down below. But let's have a look at rotation. So this is the last 5 days. Over the last kind of 2 to 3 trade sessions, it's been semiconductors. NVIDIA in particular has pushed semis really, really hot. Technology's done well. Regional banks have done okay. I keep saying utilities. Consumer discretionary has come through. Obviously, I'm looking at utilities, hey? And then, of course, we've got the utilities, staples, and some of the demand destruction stocks. All of those have underperformed over the last 5 days. Gold in particular, which we've warned about plenty of times here on the channel, goes into a period of a bit of weakness here. Also, I think agriculture goes underneath. Remember, if you've been a bear in this market this year and you've been shorting metals, you've been shorting energy in general, gold, and possibly agriculture, it's been okay. If you've tried to short these tech stocks, especially NVIDIA, it's been brutal. And I do feel sorry for everyone on that one because it is a brutal trade. Like, this is an absolute huge move that is really putting the pain. I mean, they say the pain trade to the upside. In this case, yes, the pain trades across anyone that's trying to short tech. And until it cripples everybody there, it probably won't want to turn. Let's have a look through the rest of it. This is the one-day action trade of Friday, and it was just huge on the technology. Then we saw, of course, also discretionary doing well thanks to Amazon and those big calls coming through on the session. So just before we jump into the charts and we take a look at all of the hottest levels that we need to be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you've been interested in potentially taking a look at the platform we've been focusing on here in the channel, we've got some good things to look at, then you may want to take advantage of this special offer. For the Australian and New Zealand viewers, you get a little bit extra. Yes, everybody else, special offers down below. We still have some for most of the people around the world. But if you're from Australia, you'll get an additional $50 worth of Microsoft stock if you fund with as little as $1,500 over the first 7 days. Now, why do we like the platform? Well, we've talked about customization and the ability to do that many times here. You need to know a few things. It's great to be able to read the tape, obviously, within the platform. It's great to have easy ability to enter new orders. But one of the things I like most at the moment is, of course, news and premium news feeds. If you've ever tried to buy something like a Reuters platform or a Bloomberg terminal, you would know they're really expensive. And you do get access to some of the premium news feeds within this little feed here. And of course, you also get IV percentile, IV percentage for your favorite stocks. Whether you trade Australian stocks, American stocks, or of course, stocks around the world, Tiger Brokers has you covered for so many. Check them out, links in the description. All right, well, let's jump into the charts. We'll start off here with the US dollar. Very strong couple of weeks for it. We definitely have believed in that. Now we've entered, though, our area where we believe dollar could get short. And I think this is a very critical supply zone, and we're watching it like a hawk. We have here the Friday close, and you can see it's a long leg doji. So that means that usually the market has hit kind of like an equilibrium point. It's happy with this level. I wouldn't be surprised for it to kind of float around here for a little while. It's come into the fibs. Let's just quickly remove this for a second. Now, what you'll notice is that we have this trend line that's been pushing this market up. We've also got now a higher high period, and we have this low here. So we can be pretty sure that if the market is able to get underneath this level, it's starting to do some potential distribution turns. So I think I'm looking for 103.72 to show US dollar weakness. That will push us through the trend line. Then we come back up, maybe retest the trend line component, and then that allows for further shorts to be placed. US dollar certainly at a critical. I'm not short it yet, but I am looking around at this level. Let's move over to gold. Now, we've talked about this being weak. It continued to be weak. We've smashed into the daily level here. We're not quite at that 1920 that I want to see. and I still think that that's very possible. But buying here, could come through. I do feel like we're probably moving still down to 1920, which is this little block over here on the left-hand side. And I have a suspicion that's more than likely. A lot of people now really want to short gold, though, so we've got to be careful. Everybody wanted to buy it up here. Now everyone wants to short it. Well, you know what it is. It's kind of like the market right now. Everybody wants to short it still. People are now starting to turn, so that's when you've got to be most cautious. Gold, new lows underneath 1936 could certainly push the 1920 barrier. We'll move over to natural gas. We got that big TD9 reading last week. I still think natural gas could come down a little further, push into this demand here, $2.29 would be a level. I always say caution when trading natural gas. It has it's called the Widowmaker, can move 30% in a day, and it has brutal rolls. So be careful if you're new to markets. What about US oil? Well, US oil is trading around its favorite zone. It came back down to this trend line. It was unable to break it. It was unable to break a new low. So it technically only has turned on the small time frames, which is here. So if that's the way we're looking at it, then there could be shorters here around this most traded zone. I'm still very unclear on energy at this point. I've seen runs many times into the beginning of June, so I'm kind of like cautious here. I said the same thing against energy stocks, which you can see are consolidating. And while I'm still negative on these over the next coming months, I do think that we're kind of in a bit of a trap zone for now. Tesla was the standout for Friday, really. Now, I thought we might find some sellers around the 61.8 fib, but if you go down to the smaller timeframes, there was nothing. What we do now have, though, is an absolute hit to the most heavily traded zone. So this is the serious trade zone that we saw have so much money in it before. What happens here is going to be very important for Tesla. And if we scroll down to a 2-hour chart, you'll notice we put a new high in. So now we have a low point that we can now mark on our charts, which is around 178. I'll update options expected moves later on this week, so don't worry about that. But we've got high, low, higher, high. Now do we see a lower low? Do we see that real turn point underneath here? The trend has remained up. This has definitely not turned when you think it would. Now, small time frames, you never got a daily turn. But if you're in this and you've got multiple options shorts that are given enough time, I don't know if I'd be scared yet. I mean, just touching the heavily trade zone, this is, if shorters are going to sell off their stocks, they're loving that day because that allows them to trade some serious volume through and get rid of the position. We'll keep watching it. Tesla ended up putting in a pretty good week, but you will notice there was some profit taking on this stock, unlike the market, which stayed very high. Remember, this stock rejected. Let's have a look at some other tech stocks. Apple, did it reject by the end of the day? No. Did it stay around this zone that we've watched? Yes. Has it made a new low? No. So we know that this is still in an upward trend. No turn for Apple yet, though we often look at that as a canary. What about semiconductors? Is there more room to run? I think this chart shows you it's possible. And while that seems like it's unbelievable and people say it's crazy and stuff, yeah, I get that. But, you know, there were short opportunities potentially around here and even around here in the markets. There's not that much when you're in the middle of nowhere land. So what this is probably doing is it's going to a point of equilibrium around here. Semiconductors are still on the run. I don't know if it's going to give another big day out of it or another big week, but we're starting to get probably, look, this is getting extended. And when you get these types of gap extensions, you know that you're in a run that will become unsustainable, but running through it is pretty exciting. And then what happens is it gets crushed, and it's what we call a blow-off. And blow-off is most likely coming here. I think NVIDIA is clear when we look at that chart. We'll check that out in just a second. In fact, here's NVIDIA. That's the type of big candle I'm looking for to show me a blow-off is coming. How do I know a blow-off has happened? Well, we'll get crushed on the stock. So the stock will just out of nowhere get massively hit. Can you predict that? In my opinion, not really. The actual initial crush, very difficult. Could go 450, could go 500. I don't know how high it can go, but what I do know is it's outside of the stratosphere at this stage. Be very cautious, guys. Time is of the, on your side there. If you're going to try to start picking tops, you need to use the right instrument. It's certainly not a CFD, in my opinion, or futures contract. You just get obliterated on those. It'd have to be an option with risk management. Do what you want to do. I'm cautioning. I've said that for a while. NVIDIA is scary. A few of you have sent me through messages saying, thank goodness I didn't try to hammer that last level. And I said, well, look, the thing is, it is a tough level to hammer because you know that this is the AI stock. Everyone's on it. It's like Bitcoin when it went up to 30, 40,000. Can you sell it there? Probably not. You have to sell it when everybody says, oh, this thing's worth $100 million. When that happens, outlandish stuff, that's when you start to go, what's going on here? And then you'll usually see a crushing. Let's move over to Amazon. If you held this one, congrats. I actually clipped this at 118. But anyway, hit 120. Perfect. Nice. Very good level. And if it keeps going, you can't stop it till 135 next time generally. You got a lot of gaps in here. So Amazon's still well behind the other tech stocks. And that's because it's consumer discretionary. Often the second sector or the third sector after semis that usually runs. So certainly one we're keeping an eye on. We've already done NVIDIA. Let's move over to Disney. Look at this. Tale of two markets. Disney looks horrible on a chart, guys. But what I do notice is it gapped back down. It's kind of creating these red candles here. And it's got quite a few red days in a row. If this now gaps back up, could it be the island reversal? We're seeing a switch in options plays here. So I think that's something that's important. The squeeze is obviously down. It does do bad in pre-election years. So there's a lot to say that Disney could keep going to 84 or 78, 71, which are my critical levels. That they're kind of like my investment concepts. It's Disney. It's floating down. We don't have a turn yet. DAX, nothing to say here. Hit the multi-year high, came down into these wick zones, got super bought, probably coming back to a fib level now. If it's going to sell, maybe around the 61.8 fib is a good short zone. If you really believe you should short it, I don't think we have the turn on it yet. This was an excellent short because it was a multi-year all-time high. Here is more of you're guessing that it's coming back down and everything's weakening. What about the XJO, the Australian market? Well, it's had a nice little bounce in it. People will be like, but Tom, you think that's going down? I still do, but you need copper to obviously fail. And the debt ceiling news was too much on Friday. It pushed it up. Everything's up and around. If we get through the high up here, well, then I'll change my opinion maybe for the time being because that's what you have to do. You have to remain flexible. But yeah, I still think that this is still a weakening market at this stage, though that is a pretty bullish candle. Move over to the US 30. Looks totally different. Look at that. This is the top 30 stocks in the US, and it's not looking that healthy. We talked about this. In fact, when we got those 5 days down for the Dow Transportation Index and the industrial average, we know that markets historically went into squeezes. So we actually saw the squeeze. We're actually seeing it right now. One of those squeezes went 9%. The other one went 2.6. So we're past 2.6. Do we see the 9% squeeze? Now, that squeeze wasn't on the Dow. It was on the S&P in those cases. And we're starting to see, of course, the NASDAQ in particular, just squeezing everybody out, going really, really high. I just want to show here, again, those expected weekly options highs. Sorry, guys, I have to remove those for you because they are wrong. Do you know that we're going here? This Qs, look at this. The Qs have gone above these highs. Look at all this gapping that comes here from April. Could we keep going? It is possible. This is an area, though, where I believe turns could happen. And we're watching those other indicators to show us the turn is real with the technical analysis. Remember, don't use one reason, use many reasons. Here is what is actually possible, though. 370 could happen. If it did, people would absolutely lose their minds. But the reason I put this chart up is I want to put the daily 20 on. We haven't used the daily 20 enough recently. And I think, it's an underappreciated sometimes moving average. It's the number one. It's the best moving average. It's the mean reversion, the middle of the Bollinger Band indicator, all sorts of things. So take a look at that. We're so far away from the 20, but where it gets more wild is the weekly. Look at that. Look how far away that is. That's starting to get on real percentages. So we've got here a market moving, which either requires a stagnation in the market again, but it is 10.57% away from the 20. That is starting to get up there. That means that mean reversion will come, or at least it will slow down to get to mean reversion in the future. And this is something that I'm sure bears like to hear. Let's move over to the US 100. It is on a weekly TD like 12 or something. That is a very extended market, but it doesn't mean you can say, oh, it's short yet. If you did that, then you would have been calling every single level. Do we have an above here? Yes. Could we see a turn here? Possibly. Could it go upwards of 15,000? I think it could. And that's the problem. We've got this extended market with no turns. Even the market that sold when it did sell during the days, it only managed to go back to the previous weekly, roll reverse, and then keep going up. So we're outside a lot of Bollingers. We have a lot of signals that could be showing us, but no absolute turn at this point, or at least anything like that. SPX, now this we've been talking about being a Wyckoff possibility. It's dull. That means it continues to make a series of higher peaks and higher troughs. It's pretty dull. It's hard to short a dull market. Obviously, I have put a little portion in for my September position, and I've done that using instrument of options because I don't want to stop loss, frankly. I don't want to get smashed by all of this manipulation. But, it's all about understanding, do we actually have a hour turn or daily turn here? Not yet. We haven't got underneath this level. Until that happens, we can't be sure that the market has said, oh, yes, we're ready to do the turn. So we're back at these highs. We're coming up to some really big levels. If we go over to a Wyckoff schematic, you'll see what we thought maybe is possible, little LPSY. At the moment, we're back above the high. Again, doesn't stop that this could be a distribution, but if it does keep breaking out, we cannot avoid the truth, and the truth could be a bit nasty. Let's have a look here at ES futures. We've got a Bollinger, which could go very wide. It's above the high of the Bollinger, certainly not a great sign if you're feeling bullish, because when it's outside of the Bollinger like this and it hasn't started pressuring it, it can be a sell signal. Let's look at the US 500. Here's that big daily. Now that's going to have not much volume in it, that trade there. Even though it's big volume trading, it was very quickly repricing. So a lot of the volume went through more in these high levels. Now, if we do get through all of this and we keep finding a nice big daily close, which remember, we haven't found a nice big daily close yet, could we go to 4,350? Yes. And that would show us that breadth potentially is starting to turn. And if we get the breadth, then we're looking for those pullbacks, which will come. I wouldn't feel FOMO. I think they will come. You will get it. You may not get NVIDIA at 100 again, but it probably will get dropped quite a lot. I wouldn't be surprised at all if it got dropped like 20, 30% fairly quickly. It's very, very possible, and that only takes you back a week ago, but it is what it is. Let's move over here, though. So these levels are extreme. If this market keeps finding a big daily close, which obviously it hasn't really on the real market, then we could start to move into that level. No turns yet, guys. Big rejection weeks. We talked about that most heavily traded zone finding buyers. They did find buyers. There was no turn at 41.80. There was nothing on the small time frames. They didn't want to do anything. So there was no short, unfortunately. And now we find ourselves at these highs. Let's move over to Bitcoin, probably the most surprising market out there. The daily did close below. That certainly made me think it was bearish. And this one, I would say, is a bit of a mistake turn. If I was trying to short that again, I would have gone for it in here with a stop just above this or above this high. Obviously, that would have been a loss. So yeah, with Bitcoin, it's out and it's at the most traded level now. This is the second short zone. Is it going to find shorters? I don't know yet. We have not enough information. Daily looks pretty strong. Weekly, obviously, is coming back through. But yeah, no 24,000 and no continuation of those shorters. The debt ceiling was too much for it and it pushed it back up. Let's have a look at the news for the week ahead. We've got bank holidays everywhere on Monday. So obviously, that's why this video is coming out when it is. Thank you very much for watching. US dollar, CB consumer confidence. Then we get here some CPI numbers for Australia, which might be interesting. And then we go through JOLTS job openings on Wednesday at 10 a.m. Scroll through, we get ADP non-farm employment change numbers, which is going to be a big one. ISM manufacturing PMI. Now, do remember, it's not actually this number that matters. It's this number that matters because it is jobs numbers week. And it's arguably, at the moment, probably the second or third most important bit of news. So definitely check that out and make sure to pay attention. If you haven't already, subscribe to the channel. Follow us over on the links down below. Thank you very much for watching. And I hope you enjoyed the video. And also, if you want to help us out, you can also go check out the sponsor of today's video, which is Tiger Brokers, and look at their special offers. Thank you so much, guys. We'll see you in the next one. Bye for now.